Good morning, everyone. This video is just going to be a brief explanation of what the yen carry trade is and how this is all connected to GameStop and other meme stocks. In short, it is basically a strategy where investors borrow the low interest rate Japanese yen and convert it into a higher interest rate currency, like the US dollar, to invest in assets that give you a higher return. The risk is, as the strengthening yen goes back up, it could erase profits or lead to some losses. The strategy involves a significant amount of borrowing, and a sharp reversal in the yen's value can cause this chaotic unwinding of certain market trades. So let's just take a look at what is the Japanese interest rate at. So 10-year chart. So it looks like they aren't at 0% anymore. It has been slowly climbing back up, half a percentage point in interest rates. Looks like from 2016 for 10 years, for almost 10 years, it's been at 0%. So borrowing from the Japanese yen was pretty much free money. So what traders have been doing is borrow from the Japanese yen through all these years at 0% interest rates. And they convert it into a stronger currency, the US dollar. They move that money and they invest that money where they can get a higher return. It's free money that they can get for 0% and they invest it for a higher return. And if those assets earn more than the cost of taking out that loan, then the trader makes a profit. So why was the Japanese yen so cheap? And why were the interest rates so low for the longest time? To fight deflation. They've had falling prices for the longest time in Japan. From 2016 to 2024, the rates were at near zero, but they wanted to encourage demand. They wanted people to spend money. It made the yen the cheapest major funding currency in the world. Borrow cheap yen to buy US assets that give you a better return. A lot of it went into tech stocks. A lot of hedge funds were doing this. And again, how is this related to GameStop? Well, in 2021, GameStop became legendary. I mean, look at this jump. Just look at that candle. Many hedge funds, big financial players, borrowed a ton of money from Japanese yen, converted it into the US dollar, and used some of that to short GameStop. They believed the stock price was going to go down, so they borrowed shares, sold them, and hoped to buy them back at lower prices. But things went a little sideways for these giant hedge funds. If the yen suddenly goes up in value, which is currently happening, the highest it's been in the past 10 years, this is where the whole yen carry trade unwind comes in. Now, this is all speculation, not financial advice, but if we go to Roaring Kitty's page, he has this. Can you guys see that? Was he trying to tell us a sign? I'll wager with you. I'll make you a bet. Look at that thumb. So just take a look at that thumbnail. It looks like a bunch of Japanese people freaking out over something, right? If the yen suddenly goes up in value, those hedge funds have to quickly buy back GameStop shares, driving up prices even more. And that's sort of what happened in 2020, 2021. And then they have to convert their dollars back into yen to pay back some of those loans. If they don't do that, they take massive losses. There's a lot of leverage right now in the markets, and everything is so fragile right now happening in the markets. When all this borrowed money suddenly rushes out, it could create a crash in the markets. People are going to suddenly panic, and everything is just seriously unpredictable for everyone. So the Japanese central bank is currently in a rate hiking cycle. Their interest rates are at 0.5 right now. What do you guys think? Let me know in the comments below. Thanks for watching this short little video, and we'll see you in the next one.